Hello, traders. It is Friday, September 25th, and we are about 3 hours into trading. Let's see what the market's doing. Very choppy session so far. We do have a double top forming here. It's below the high from yesterday, so I think that resistance at SPY 326.40 is probably going to hold for a while. We've got this nice upward sloping trend line. Here's what you can see. Lots of red candles together mixed in with green candles. There's no pace. There's no direction. It's been really hard for me to find really good trades that I can put in my daily videos that you can sink your teeth into because there's no direction. The market's up one day, down the next, up one day, down the next. So even though I come out with a pick today that looks really strong, overnight could have the market down and then the pick doesn't fare so well. Very choppy. So I'm not going to do that. I'm going to take a look at a couple of stocks. We'll do a little bit of market analysis. I'll tell you where I think it's going to go and what's driving the market. Then I've got a nice little bullish put spread that I think works well in this environment. Right now, we've got the coronavirus fears, I believe, subsiding. I think that, yes, new cases are spreading, but I think people are starting to adapt to that. They're not in shock, they're not in fear from the day to day barrage that we get from the media on the new cases and all. So I think that that's actually improving, and I think that people are ready to restart their lives. I see very busy stores when I go shopping. Everybody's got their masks on, they're practicing social distancing. So we're not seeing the type of panic selling that we saw back in March, and I don't think we're going to see it again. We also have a stimulus plan. I was reading that Steve Mnuchin said that he's met with Nancy Pelosi 15 or 20 times in the last 3 days. Well, that's encouraging. That means that both sides are talking. They want to get a stimulus bill done. I believe that the market is starting to price that in a little bit. At least the probability of it has improved. Will it happen over the weekend? Maybe not. But I think that's what's keeping sellers at bay. Even if it happens in the course of the next week, even if there's more encouraging commentary coming out of DC, that would be good for the market. So we're seeing a pullback. We'll go into the daily chart, and we have a downward sloping channel, and you can see the upper part of that channel right there. Visually, you can just draw that lower end of the channel right there. I can also draw it for you so it's a little bit easier to see. Click there, click on that candle. So you can see we've got a channel and it's just bouncing along. It's 3 steps down, 2 steps back, 3 steps down, 2 steps back. Every time the market gets overextended in one direction or the other, it reverses back to the other side. What does this price action tell me? This tells me that there is some profit taking out there right now, but there's also a pretty decent bid, and that's why we're not seeing ka-chunk, 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 big drops down. We're seeing a very gradual slip, and you can see how the new lows through that support level are marginal. They're marginal new lows, so that drift lower is starting to gradually slow, and that happens to coincide with the 100-day moving average, which we touched barely yesterday. So there seems to be a pretty decent bid there, not a lot of panic. Could we come down to this 200-day moving average when all is said and done with this downward sloping channel? Yes, what I'd love to see, what would really inspire me from a buyer's standpoint, is if we saw a really nice big long red candle or a couple of them that come right down to that 200-day moving average. That would be the cleanup, as it's called. And I'd love to see a bullish hammer right off of that level where we poke through it and the stocks rally back, rally back, rally back to close on their high of the day. That would be a capitulation type blow, and it would signal that we will have higher prices coming. Even right now, I believe that there are some decent bullish put spreads that are starting to set up on stocks with relative strength. And I'm willing to take that chance because, again, if I stay inside of 3 weeks, I have accelerated time decay working in my favor on these trades, and I still have the possibility that the market could pop and that we could get some decent stimulus news. So I think this is a good time to start dipping your toe in the water. Don't get super aggressive, and look for some bullish put spreads that you can sell. So I went through the list this morning. I took a look at some stocks, and I happened to find one. It was on Bull Run. I don't know if the stock is still in there or not. We can click through a few of these and see if we've got some nice stuff setting up. That's all I do. I go through the lists, click, 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 take a look at the charts. Here's one that I like, and I just posted this in the chat room. I like TWLO. You can see how it's had a nice horizontal support level right here around the 215 level. You can also see how it has bounced off of the 100-day moving average. You can also see from the orange line that it has relative strength. Let's put the SPY overlay up, then you'll be able to see it more clearly. So, market. Yes, the stock dropped initially with that market pullback, but now look at this second wave of selling in the SPY. Market down, 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 stock flat, really holding support well. Well, I don't want to get too close to the money. In fact, I'd like to distance myself as much as I can, and I'd like to get as many support levels between me and my short strike price as possible. If those support levels start to fail, then I need to consider reeling in my bullish put spread. But if the market just keeps gradually drifting lower, and if the stock keeps holding this horizontal support level in another week and a half, this position gets so much easier to manage because time decay is already starting to come out of the position. So I looked at this spread and it is doable. This is an October 9th bullish put spread, so you only have 2 weeks left till expiration. I like selling the October 9th $215 put, and I like buying the $212.50 put. So there's 2.5 points between the strike prices, $2.5 between the strike prices, and I like doing that for a 40-cent credit. And I think that spread was doable. The bid-ask spread on the spread was a negative 20 cents bid, which you'd never do it for negative 20 cents, but just shows you how wide the bid-ask spreads are on options, and it was offered at $1. So if you take the midway point of that, you're somewhere in that 40-cent range. I think that's very doable. And I think that that's a nice credit spread that's going to generate about a 20% return. And you've got a couple of factors working in your favor. Accelerated time decay because you're only 2 weeks out. You've got some market support forming here at the 100-day moving average. You've got the stock already finding support before the market found support. You've got that 100-day moving average, and then you've got this horizontal support level on the stock. So lots of buffer, lots of cushion between you and that short strike price on that put. Plus, you have the potential for the stock to really lift off. It looks pretty good today. It's been in a nice, choppy, upward trend so far today, and you can see it, and that's why it was coming up on my searches earlier today. That's the type of trade that I would be looking for. Again, you'd be selling the October 9th $215 puts. You'd be buying the October 9th $212.50 puts, and you'd be looking to do that for a 40-cent credit. If that 100-day moving average fails, you got to buy that spread back in. You could also have a caveat that if the stock is holding up well and the market breaks below the 100-day moving average, you stay in it. But if it comes down to this 200-day moving average and breaches that, even if the stock is holding pretty firm, I think you got to buy back the spread at that level. So those are the stops that I would use for that particular trade. Let's keep going. Let's see what else we've got. I'm going to be looking mainly on the bullish side because, as I said, I think the bid is fairly strong. You know, asset managers right now, they look at interest rates and you look at bonds. Fixed income yields are below the inflation rate. So you have a negative real return that you're generating every time that you buy bonds. Well, that makes stocks an attractive investment alternative. Even at a current PE of 22, asset managers are kind of in the mindset of, well, I'm not going to make any money in bonds, so I might as well just ride this soft patch out, hope that the coronavirus runs its course, hope that there's a vaccine, and that people are gradually starting to get their lifestyles back to normal, and that we start to see an economic recovery this fall. So they're willing to just kind of ride this out and stay in equities. That's my personal opinion. I believe that's kind of the mental attitude that asset managers have right now. The only thing that can really lead to a very long-term sustained market decline is a credit crisis. I don't see any imminent signs of that right now. Of course, they could surface, especially if this virus continues on. You've got people possibly being evicted from their apartments. There are some undertows to the economy and the market right now, but I don't see anything that's super threatening. Certainly not within the next 2 weeks. If we keep our bullish put spreads very short term, we're able to evaluate market conditions on an ongoing basis. So that's also why I like that strategy. So let's take a look. Let's see what we've got going here. Heavy buying's one of my favorite searches. Actually, I'm going to go into Pop Bull first. We don't have anything in Pop Bull today. And I'm going to go into the daily chart NVAX. Oh, did I nail this one early today? I got long that stock right out of the gate, clipped it for $3, got back in, took another $1.50 out of that. So that was a really nice one for me. Let's take a look at that daily chart and see what it's doing. Here you can see sell off to the 100-day moving average. Nice double bottom, higher low, starting to get through this downward sloping trend line here on a daily basis. I like it. I think NVAX could go. I don't follow fundamentals, so I don't know anything about it. I know that it's a biotech company, so take that into consideration. It is a volatile stock. Could you possibly sell a bullish put spread here? You might be able to. Gosh, I'd feel better if it came down and touched that 100-day moving average, selling one down here, to be quite honest with you. That's what I would prefer on a very volatile stock like this. But you can see it's a runner. It definitely has some upside potential to it. PTON, just not stopping. It is going a little bit parabolic. And you can kind of see that by drawing a trend line across these tops right here. Let's do that. That's always a dangerous situation because that's how buying climaxes form. And you can see that it's got a nice upward sloping channel right through here. So it's poking through the upper side. Could hit some profit taking in here. And keep looking. Let's see what else we've got. Pen a little overextended. UPS. What I would do here, click GTC, double click on that bar. Now I have an alert line. If that stock breaks out to a new high and it gets through that compression, I'm going to know about it. This is actually nice. I like this. This could actually set up well for a bullish put spread also. And this has been such a strong stock. Big time compression right in here. Nice breakout. Comes back and it challenges that breakout, tests it, tail under body. Now the stock is starting to climb well above the halfway point of this red candle. Yes, I think a bullish put spread down on the $21 level could also work. But this one would be a little bit more dicey and a little bit more iffy. But yeah, it looks pretty good. The stock actually wants to bounce right in here. It's had great relative strength, and you can see that on the chart here, orange line above zero. WRK, don't see anything too tempting there. Nothing too tempting there. Nothing too great there. So I'm just going to keep flipping. And let's go into a relative strength 30, see what's Boeing. See, here's a classic example. Yesterday, Boeing looked like a great short. It ended up being a good short throughout the course of the day, but you couldn't overnight it because the stock bounced this morning. So, on a longer term basis, to try and be short and to try and time this downward sloping channel in the market, very hard. Bull markets die hard. We're in an 11-year bull market. We're in a 5-month bull market. Every drop that gets overextended, you can almost bet that the next day you're going to see a nice bounce back. That's a sign that there's still a decent bid to the market. We've looked at all these. FedEx. Ah, boy, that's really run. Now, here's what you should do. When you see a nice, tight trading channel like this or a tight pattern, drop those good till cancel trend lines because I'm not going to chase FedEx on the way up. If I were long it, yes, I would certainly use that to help me manage profits. It's like a trailing stop, but I will be using it so that if the stock cracks down below that upward sloping trend line, I'll have a really nice short setting up. So that's why I have that trend line drawn right there. Let's go into bull run, see what we've got here. Got a lot of hotel and restaurant stocks that are rallying. DRI, Darden Restaurant, Olive Garden. They posted earnings yesterday. They were quite good. More importantly, they're talking about offering relief to hotels and restaurants and airlines in the new stimulus bill that's being negotiated. At least that's what the Democrats want to have included in it for sure. So you're seeing some of these dogs bounce. Might they have some upside potential? Yes. Might they be good bullish put spreads to sell? Maybe. I mean, if that stimulus package comes through, not my favorite. I would prefer to see stocks that on their own, without any government intervention, are moving higher. But that's just my personal preference. So I'm just going to click through. See, I don't care for anything like this, although it has 1, 2, 3 touches down here. That's nasty, and that's negative uh, that's weakness, relative weakness to the market. So wouldn't touch that. Banks have been generally soft, so not really seeing anything that I like there. I gave you a nice pick in TWLO. I think that works. I think WKHS, that also could work for a nice bullish put spread. So those are two that you can consider. I'm not going to force it here. The bottom line is that this is a very low probability trading environment right now. Yes, we have a gradual decline coming in here. We want to see that capitulation low in here. We want to see those major moving averages tested. As soon as that happens, could happen in a week or two, then I'm going to get much more aggressive with selling out of the money bullish put spreads instead of setting aggressive targets and having the stock come in so that I can get those bullish put spreads done at a good price. Once we establish that low, bang, 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 I'm going to be hitting them left and right at current prices because then I'll know that the market has put in a low and that we're ready to start grinding higher. Have a great weekend, everybody. If you like this content, please give it a thumbs up. Please leave your comments also. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss one of these videos. Who knows? I may be in the mood to do some research Sunday night and post a video. When I do that, I usually have a pick for you on Monday morning. Thanks. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.